Hi, everyone. This is Project Treasure Island by Brian, Eliana, Anika, and Shavril. Our advisor is Dr. Chin, and our group does finance and data science research. So here's a bit of background on our group. Our broad aim is to apply data science methods to solve problems related to finance. So for example, we look to design stock investment strategies, build machine learning trading models, extract insights from social media and trending news articles, all to better predict the market. And on the right here, Project Treasure Island is our group's first project, and the goal of this project is to find the best stock investment strategies defined by a low risk and high return. So to start off, we had each of our student researchers design 3 stock investment strategies, each starting with $1,000. We used internet stock data from the years 2014 and 2023 to simulate each of these investment strategies, noting the risk and return. Our group was able to come up with 30 plus different risk and return data points, and we're looking for ways to design a playbook for the best stock investment strategies moving forward. So this is a visualization that makes our methodology more clear. Each investment simulated starting off with $1,000 and investing it into any combination of these 10 stocks. We bought into these stocks at the beginning of the calendar year and sold at the end, noting the percent return. So for example, if we start off with $1,000 and we have $1,500 by the end of it, we have a 50% return. So as with any experiment, we have to define our success metrics. We defined a successful strategy as being low risk and high return. The risk was measured as 1 standard deviation of the annual percent return from 2014 to 2023. And the return was the average percent return from the years 2014 to 2023. So at the bottom of the slide, we have an example row of data. We have the years 2014 to 2023 and the percent return for each year. And then we have the average percent return and the standard deviation risk. So this is just a diagram that visualizes our metrics. Let's say the data is these 10 red dots at the bottom. Our return is the mean of these dots, and our risk is 1 standard deviation. So we ended up constructing this visualization of risk versus return. And this visualization is pretty important because it shows a mostly linear relationship between risk and return. Investors will often look for high return strategies, but should acknowledge the high risk that often comes with it. So there are 2 main limitations of our experiment. The first is inconsistency throughout calculations. We had student leads review each researcher's calculations, but still can't really guarantee the synchronization of a methodology and assumptions. And second, the investment performance from 2014 to 2023 might not be representative of future results. The stock market is random by nature, and economic events in like new technology or natural disasters can strongly sway the stock market.
Next, our project analyzed student stock risk intuition. We are answering this question: what risks do our researchers estimate to seek the best strategy to find their treasure island? We had students name their investment strategies by the risk levels they had estimated, which can be characterized by low-risk investments, which are defined by lower potential for significant fluctuations in value and a higher likelihood of preserving capital. We had desired risk, which is characterized by a moderate risk with a high potential for return. And finally, we had high-risk investments, which are typically characterized by a greater level of potential volatility and uncertainty, but with a higher likelihood of experiencing significant fluctuations in value. Our risk metric was analyzed through standard deviation, and which was compared to, again, the researcher estimated risk level. Many people had conflicting perceptions on the risks of their strategies, such as with my strategy, which is noted with our risk visualization. I had ranked my stock strategy as very low risk, but when it is compared to our risk metric, this investment method was actually very high risk. But in contrast to Brian, the other researcher, he had a very accurate intuition on his stock risk level strategy, which is noted by this blue data point that accurately follows our risk metric. And this poses the question, how does risk perception impact a person's trading strategy?
So as Eliana was talking about, there's this relationship between return and risk. And so our Treasure Island goal is to get the most return we can with the least risk possible. So one of the things we explored was diversification to see if it would get us any closer to that goal. And what diversification is you start with investing a lot of money in one stock and slowly expand to see if you can invest lesser amounts of money in more stocks. And I'll pass it on to Charvel to talk about some of the results we got with that project.
Now, the 30 plus investment plans that our student researchers created was very good for a great first look at our project. However, in order to get greater amounts of data and to have more investment plans, we need to automate creating these investment plans. We defined each one as a set of stocks in which we invested equally from, and all of these stocks would be pulled out of the 10 stock data set introduced at the start. The reason I have Pascal's triangle the reason why I have Pascal's triangle shown here is that we have one data point with no stocks, 10 data points with one stock each, all the way up to one data point with all the stocks, representing maximum diversification, for a total of 1,024 plans. All of this was created using a Python algorithm that we created ourselves. Next. As we can see here, the risk versus return scatterplot is very similar to our researcher-created one, due to similar data points created using similar strategies. The reason for this is that many of the researchers unknowingly created strategies that would later be included in the scatterplot due to using similar ideas, yet they chose the stocks on their own rather than going through all combinations. However, after working together to create this, we were able to graph all possible combinations, giving us a larger data set to pull conclusions from. Next slide, please. By plotting all of the combinations based on the number of stocks used to create them, we can pull some important metrics. From the graph on the left, we can see that the average mean return from 2015 to 2023 is in fact the same. However, the range of values is drastically different as we diversify. This means that no matter how many stocks we use to create our investment plans, the expected result is the same. However, we're much more likely to be close to our expected result with higher levels of diversification. This is similarly outlined by the second plot, where the minimum risk strategies have all a similar standard deviation, but we're much more likely to encounter a high-risk strategy with low diversification. I'll now hand it over to Annika to say what these statistics mean to investors.
Right. So if you're looking to invest, is diversification for you? Well, if you're trying to go for that Treasure Island goal of high return and low risk, not necessarily, because the average return pretty much stays constant. It pretty much stays along that trend line and doesn't move you to that upper left corner. It's not a get rich quick strategy. But if you're looking for something safe, long term, where you want to store and save money, but you don't want it to be with a high risk, well, diversification is what you should use. And not only that, we look to expand on this by trying out more strategy with our future plans. Diversification is just one thing in our future plan, in our playbook for our stock investment, as seen on the next slide. We'll keep experimenting with things so that we can build a toolbox, a playbook to see where things will take us. Will they take us to the Treasure Island goal? Will they just increase return? Will they increase risk? For example, we want to look into things like sentiment analysis of news or social media, and then modeling to build predictions to figure out what will take us to that desired goal. So that's our project. Thank you so much for watching and allowing us the opportunity to share it with you.